is December 15th. It's 5:05 p.m. just after market open. My name is Liam McMahon. You are in the globalfxclub.com weekend webinar. Thank you very much for joining me. Please do me a favor and read over the disclaimer, which is now on your screen. If you're watching the recording, please pause the recording, carefully look over the risk disclaimer, and then we will go to the charts. We're going to cover a lot this week. It's a very exciting week. Major data on Wednesday with the FOMC rate decision, but we have a lot more than that this week as well. So lots to talk about, lots to analyze and try to figure out. So let's begin. So we're going to start with pound dollar, one, because I think it's an interesting setup, and two, because that's where my chart happens to be. So I'm looking at pound dollar, and there are two potential scenarios that I see playing out, one bullish, one bearish. Right now, I have a soft preference for the bearish one, mostly because I missed the start of the bullish one, which started here down at about 162.60, so about 30 pips ago. You can see here, this is the bullish setup here. We retested this previous horizontal level. We bounced off of it twice, and now we've started to head a little bit higher. The bearish setup, though, is a little bit different. Or is really not just a little bit different, it's active now. And that's as we bounce, we sort of are retesting this this head and shoulders neckline type area. I've blocked it out in a box because it's not one clear level, it's sort of a range here. And we are sort of retesting that. So if we are going to start to see pound dollar really you should be able to, okay, good, charts are good. Okay. Should be able to, so we should, if we're going to see the pound start to move lower, all right, this is an ideal place for you to start shorting with eyes of a move down towards about 161. So that's sort of the area we're looking at here. Really, the entry would be right around market. Your stop would be somewhere above this box area, some of this 163.30 area, about 40 pips. The one thing that is worth noting here on pound dollar is, all right, here's this first, let me delete all of these. Here's this first weekly level. All right, you can see I showed you on the 4-hour chart where that held. That's the bullish setup. I missed the entry, so I don't want to chase it. I'm probably not going to do anything on the short side with pound dollar either, because there is such an attractive bullish setup that may be playing out. But the other thing you want to note here is on a longer term chart. This is the weekly chart. If we do see a pound dollar correction, that correction should be limited to about 161.60. All right, so about 130 pips, and then we start to run into some pretty significant support on the weekly chart. So yeah, I would be tempering my expectations for pound dollar downside. Yeah, and I'm looking mostly for this for a pullback to really add to recreate and then add to long positions. Again, yeah, about one, even, I mean, I don't even think once we would, if we got to 160, I still think that'd be a buying opportunity, but I think the first level would be about 160. That would be a good area to be, to start looking for longs and kind of go from there. You can see, all right, you can really just think of this weekly consolidation as some sort of flag. We've broken out. We may see a move lower before higher. So pound dollar, there is a nice bearish setup, but for the most part, downside looks to be pretty well capped. About 130 pips of downside, which we may get, and then we'll have to start looking for a potential bounce on pound dollar, which will then take us to euro dollar. Okay, euro dollar also starting the week off a little bit lower, about 17 pips or so, 15 pips or so. Pound dollar is, or sorry, euro dollar is another one with a little bit of a clean bearish setup. You can see here we broke down out of this little sloppy head and shoulders type thing, and we may see it start to continue lower. If we jump to the daily chart, clear up some of these now. Mostly looking at these trend lines here, all right, as the next support area. As long as these trend lines hold, obviously the trend is up until it's not. So our first major test is about 136.75, and then the big one below that is about 136.30 or so. So I'm watching those trend lines. If we get below there, we could start to see euro dollar tip lower. Again, from the weekly chart, the different perspective, okay, that's not a positive weekly candle considering where it formed. If we look, this 138.30 level is very well trod, and it is very technically significant. It's the 618% fib retracement from the 149.39 highs to the 120.40 lows. It held with enthusiasm back here on the 28th, the week of the 28th. We tested it and we shot lower. We've rallied back up to it, and again, you can see bears stepping in and selling it late into the week, pushing it back off of that key level. So I can easily see euro dollar, all right, start to drift back down to the downside. 133.36 is the major sort of support level below those trend lines. This where it bounced last time at about this 200-week EMA. So that is definitely something that you want to keep your eye on for on euro. The biggest problem this week, all right, is going to be the fact that we have the FOMC on Wednesday. So as good a time as any to talk FOMC. Let's actually pop up dollar yen while we talk about it. This is another one that I'm watching. This is a nice dollar bearish setup. Dollar bearish, risk bearish setup. I talked about dollar yen extensively. It was a Daily FX article that I did. You can find it on my Twitter on the Daily FX guest commentary section, where I talk about not really trusting this latest move up in dollar yen strength, and I still actually think that even the sell-off that we saw may not be enough. But FOMC Wednesday, regardless of what they do, I am softly in the camp that we will push off the taper for another month at least. I think persistently low inflation is concerning enough to a few of them, and to the ones that it's not concerning, it at least gives them an excuse to wait to normalize policy, because one of the biggest concerns with quantitative easing would be increased inflation. We just haven't seen that. But regardless of what the Fed does, the market is pretty much split 50-50 as to what they're expecting. So no matter what happens, we're going to, 9 times out of 10, 99 times out of 100, we're going to see some very significant volatility as people square positions and sort of take the opposite side if they were on the side that was not correct. So on Wednesday, there's basically a 50-50 shot that the dollar is going to go up extensively or down extensively, or first another. I think even if I knew what the FOMC decision was going to be, I wouldn't be confident placing bets on dollar pairs because I don't know how the market's going to react. A lot of it's going to depend on the press conference. A lot of it's going to depend on the statement. So if we see them say, we're not tapering in December, but we're definitely going to taper in January as long as of X number, then I think we'll see initial dollar weakness followed by some extensive dollar gains. But we could actually see the opposite as well if we start to see some sort of relief rally after the FOMC decision. So the moral of the story is it's impossible to know what they're going to do, and it's impossible to know what the market reaction to what they're going to do is. So I will not be trading on Wednesday, or at least I won't be trading dollar pairs. You might find me taking like a CAD cross or a Euro Aussie type trade if I see one. It'll be somewhat insulated from the decision, though really not entirely so. But I will be looking to get into some positions here Sunday night, Monday, Tuesday, get my stops to break even, and hope that whatever the FOMC does and whatever the market reaction is, it favors my position. And if I get stopped out at break even, that's fine. I'm probably done for the week. That's how I would trade this week. All right, look for some positions early in the week, get into them, get your wrist tightened up, and then just close your eyes and hope for the best. We have some other data this week that you're going to need to want to pay attention to. We have Kiwi GDP on Wednesday. We have U.S. home sales, U.S. Building permits, U.S. CPI, which the CPI report actually comes out before the FOMC decision. So if we see negative inflation, so it's -1, -0.1, I think that's really gonna hit the dollar kind of hard when that comes. So keep your eye out for that CPI report. We also had Great Britain, their employment report and their final GDP and their current account numbers Tonight we have Aussie, oh, not sorry, well, it'll affect the Aussie. We have Chinese HSBC manufacturing PMI. Tomorrow we have a couple European PMIs. So a lot of data of opportunities, but also a lot of volatility. So sort of just keep all of that in mind when you're trading. This is not a week to leave profits running, and it's not a week to leave your stops on, not a week to have positions up a couple hundred pips without taking any profits. This is a week to trade conservatively because it's going to be very volatile out there. Yep. Stops tight, and then even if they're not tight originally, tighten them aggressively. Really start to pay attention to your positions this week. This is not a week you want to let things go. So, dollar yen. Let me show you real quick. Most of you, if you follow me on Twitter, have seen what I'm about to show you already, but I'm going to show you again. Okay, I'm going to show you the dollar yen overlaid with the Nikkei, and then we're going to talk about why I don't like the dollar yen. Or why I didn't like it up here, and now why I'm interested to see where it goes from here. So we saw dollar yen rally. You can see the Nikkei in purple. Okay, you can see that it did not follow the rally higher. It remained low, and you can see dollar yen immediately came back to it. So now we'll have to see what we get from here. We have some RSI divergence here on dollar yen. Yeah, I'm sure that we've seen some sentiment rebalancing here on dollar yen. I'm still fairly confident the market's extraordinarily long. So hopefully if we do see a sell-off, it will be quick and hard, and we may get some very strong stop-grabbing type moves. You can see the Nikkei did not rally, and sure enough, dollar yen came back. So now, let me get rid of this. Now we'll have to see exactly what dollar yen wants to do. We have divergence here, and we also have divergence on the Nikkei. So if dollar yen can break out of this wedge, basically below 102.60, it doesn't give you anything that significant though. If we get below 102.60 or so on dollar yen, it may start to look good for some shorts, especially if we do see some risk off, which typically, hurts dollar yen. Here's it overlaid with E-minis. Okay, you can see these two ran together pretty well for a while, and then have slowly started to diverge. And now we have S&P. I mean, the S&P could be leading dollar yen lower. All right, you can see we starting to push down a little bit. We'll talk about E-minis in a little bit. I think this is one of the times where bears have an opportunity. All right, they've had opportunities before, and it didn't pan out, so we'll see if they take advantage of this one. Let's real quick click over to the Nikkei. All right, if we see the Nikkei really break below these lows, 15,300, then we may be in business for dollar yen to the short side. You can see a significant RSI divergence here. So I think the stage could be set, but we'll have to see. Equities have not been really prone to breakdowns this 5 years. So it's hard to really get that aggressive, but here's E-minis. Okay, you can see there's some potential for some risk off here as well. If we look, we're below this 200 period EMA here on the 4-hour chart. That's the first been below it since back here in October, very early October. It's been a while. Last time we broke underneath it, we got down a little bit before bouncing. This is the U.S. budget type scenario here. So now we're below that 200 again. We broke out of the wedge, and there is the potential for E-minis to continue to fall. Your support is 1700, but I would be surprised if we got there without some significant turbulence on the way. I would be surprised if we got that low. That might actually not be true. I think it's certainly possible. I think it's going to be, I don't know how equities are going to react to everything that's scheduled to happen this week at all. I don't know if we see a tapering, if the equities sell off as would be commonly expected, or if we see some sort of relief rally, or if we see them rally based on the fact that the Fed thinks the economy is in good shape. So that wouldn't surprise me either. If I was a headline writer, I would have all the alternatives provided, for my CNBC report. So, we'll see. Certainly, if we got down to that area, that would be the major support level, about 1700, 1710. All right, so that's E-minis. Let's do some other yen pairs. CAD yen at a very technically significant level. This is a pretty decent short as for yen pairs. All right, it's about a 50 pip stop. Get above this like 3 levels, you can see where stuff has been significant. Look for a move back down to the trend line at about 96. Aussie yen, still stuck in the bottom, towards the bottom of its wedge, so not a shorting candidate, more of a buying candidate. If anything, 94 is resistance, 92 is support. Euro yen, 2/3 of a head and shoulders. That's about it. If the third forms, great. Maybe I'll think about trading it. But up until that point, I'm not super interested in touching euro yen. Okay, that trend line is noting. Pound yen. 3/3 of a sloppy head and shoulders, kind of, is formed. So you could watch that, and that's not that great. Kiwi yen is a little bit more clear. All right, nice resistance trend line, nice support trend line. Play the breakout. How's it yen? CAD yen, dollar yen. So really, the two good ones to me are CAD yen and then dollar yen. CAD yen now, dollar yen on a breakout. That's about it. The other yen pairs are a little bit sloppy. Let's go to the dollar pairs. Kiwi dollar is actually pretty nice here. It's been horrible lately. I haven't traded it in a while. I stopped looking at it for a while. But I think there's some potential here. Move below 82 for shorts, move above 83.30 for longs. Nice breakout. I think there's a nice directional trade either way there. Don't have a bias until it breaks, and I'll be happy to take that one in either direction. Aussie dollar. Okay, we started to bounce just ahead of this fairly significant supply zone between 88.50 and 89. The major resistance level, the major resistance level is this trend line up here. But the minor resistance level is basically 90. If we get back above 90, we could start to see some shorts give up, all right, and cover. But up until that point, you got to respect this 90 resistance for a possibility to push through these major lows and head towards 85, which is where the RBA wants it. But if we do manage to get above 90, we should at least manage to try to test trend line at about 91.30. If we manage to break the trend line, then I get excited and we have some potential long opportunities. Dollar CAD. Major trend line support on dollar CAD comes in right about 105.70. All right, corresponds pretty decently with this previous bounce area here. So dollar CAD has some upside potential. If we manage to push below this 200 period EMA at 105.40, that's a nice confluence between a trend line break and a moving average break and may provide a pretty decent short opportunity. But dollar CAD is really right at the bottom of the list of pairs I'm looking to trade this week. It's just not been a great mover. There's going to be a lot of volatility this week. I would prefer to trade a little bit of a cleaner pair. Other dollar pairs. I did euro, right? I did pound. I did Aussie. I did Kiwi. I did CAD. I did dollar yen. Dollar SEK, Swedish krona, not super clear. Broke out of the little flag, broke back into the flag. More clear. Norwegian kroner. Okay, testing some resistance now. Break above this trend line could be a very attractive long opportunity towards 6.5. Support comes in at this trend line at 61227. I like it to the upside, but I will wait until we can clear these previous highs here, about 6.210. So looking for about 6.220 and then longer on USD NOK. We have a Riksbank, which is the Swedish National Bank. We have their rate decision on Tuesday, I think. I think it's the 17th. It might be the 18th, so check on that. They are somewhat expected to cut rates, so watch out for that if you trade the Nordics. If you don't, then feel free to ignore it. Cross pairs. Euro Aussie, trendline support 1.52, not touching it until then. Pound Aussie, trading really at a pretty interesting level here. We're at I would call this a bounce zone for Pound Aussie. We dipped a little bit below this previous level here, but I think we're still in a pretty decent area for a bounce. Sitting on a 38.2% fib that's been holding. I don't know. It's not a trade I would really enter right now, but I would keep an eye on Pound Aussie for a potential continuation higher. If we do see Pound Aussie continue to sell off, 18052 is a great opportunity to try to buy it and continue sort of this ride that it's been on. EuroCAD. Then we got to do Swiss pairs too. I didn't do dollar Swiss. That's the $1 pair I forgot. I'll do it there. All right, so EuroCAD, we shorted EuroCAD last week, got stopped out at break even, then it moved lower. That was frustrating. I like it to the downside. We broke out of this trend line finally. If we rise back up to test the bottom of it around 1459, that would be a decent low risk short. All right, if we're going to continue to see EuroCAD push lower, which I like because I like Euro dollar lower, so EuroCAD likely to follow it. So that's one to keep an eye on. PoundCAD, another one, pretty solid breakdown here. PoundCAD is actually a little bit even more bearish than EuroCAD right now. 173 is the resistance area to sell against. I'd look for about 171. The one thing you have to remember is that I am. Ooh, this is a weekly chart. This is an ugly 2-candle pattern here for the weekly. I would love nothing more than to see a significant PoundCAD sell-off so I could buy all of it. From a macro perspective, I am hyper bullish PoundCAD. Would love to see a sell-off to establish some longs. I mean, I don't think we'll get down to 164, but I would love it to get down to there and start buying it up. So I'll be watching this. I'll probably avoid longs for a while because of the way that these 2 weekly candles closed. And I actually may even look to short it if we see a little bit of a rally up towards about 172.90 or so. That would be definitely one to keep an eye on to the downside. Aussie Swiss. Dollar Swiss first. Dollar Swiss, I like to the upside. I like all Swiss pair. No, that's not true. I like this Swiss pair to the upside. We broke above this resistance level here at about 88.86. And now we're just consolidating. It needs to now get above 89.15, and I think we could continue to the upside. So it might chop around in between 89.15 and 88.80 for a little bit, but I like it higher. CAD Swiss, I also like higher. Same basic rationale, broke out of that previous range, now looking to push higher. Aussie Swiss, not interested. Maybe if we get above this trend line, you could convince me, but not super interested in Aussie Swiss right now at all. Pound Swiss and then Euro Pound. Pound Swiss. Also, yeah, that's right. I looked at this one and didn't draw anything on it. Not interested in Pound Swiss either. 144. Okay, this level down here. This level down here, maybe I'd start thinking about trying to buy it, but no thanks. Euro Pound. This is another Daily Effects article. I got longs down here. First target was 84.17. That one got hit. Now we're looking for 84.57 for the second target. That's that 6.8% fib, and at that point I may consider trying to take a short Euro Pound for a move down towards new lows, depending on how the Euro looks and how the Pound looks. This is another pair that I would trade this week after FOMC because it should be relatively well insulated. Aussie Yen, look at it again real quick. Closer to the bottom of its recent range than its top. The 94 level is resistance, 92 is support. You could buy it here. The long opportunity was here. I mentioned it on Twitter. I don't really like entering it up here just because I'm tentatively bearish dollar yen, and then I don't want to be aggressively bullish the Aussie. So if we see another trip back down to about 91.85, I'll buy it again. Just because I know I can have a 30 pip stop and a 200 pip target, and it makes perfect sense. So if we get back down, I'll buy it, and if we get up towards 94, I'll sell it. Up until that point, I'm going to ignore it while it's in the middle of its range. Gold. Gold. Okay, this is basically the trend line to watch. Corresponds nicely with the 200 period EMA. Call it 1250, get above there, and things look a little bit better for gold. I don't want to say it looks like it's bottoming because I'm not convinced of that yet, but I would be willing to say that it looks like it's trying to bottom. At least short term, maybe try to get a little bit going. If we do manage to break 1250, I like it towards about 1300, and then we'll have to reevaluate around 1300. Not going to get really aggressive with gold in either direction. Crude kind of started to roll over on Thursday and Friday, a little bit of a head and shoulders action that started to break down. Could start to see crude lower. Let me get rid of some of these. But this level right here, 95.50 is a nice 95.50 to 95.30 is a nice support level on crude. We may see it hold up there. Aussie Kiwi. Aussie Kiwi is just down the elevator shaft lately. I don't see any reason to do anything with Aussie Kiwi right here. I mean, if you if you put a gun to my head and said in 6 months Aussie Kiwi higher or lower, continue to say lower. If you said 3 months, I might probably say lower. If you said a month, I'd say higher. But I don't see anything more useful than that. I mean, it's been you can see it's been oversold forever now. There's some RSI divergence, kind of, that makes you feel a little bit better, but I mean, if you broke 108.80, I might buy it, but for the most part, I'm just going to sit here and not look at it. The only way I'd get interested in buying it is if we see it do this. Breakout and a retest of this descending trend line, and I might get interested. I mean, the macro economics behind Aussie Kiwi is who's going to raise rates first. And based on the last RBNZ meeting, it's going to be the RBNZ. And it doesn't look like the RBNZ is going to get real aggressive in intervening with their currency. They're just going to complain about it. Whereas the RBA, I think, is going to be a little bit more hands-on. Until that balance changes, I don't think Aussie Kiwi is going to be able to get anything going. I mean, if you're looking at the bottom pick, Aussie Kiwi, keep in mind that this is a multi-year downtrend. In terms of this is the weekly chart. We have seen precious few green candles. All right, other than this little stretch in September, where it tried to rally a little bit and then just got whomped again. Not a lot going on in terms of Aussie Kiwi rallies, so not really keen on trying to do anything with this pair. Plus, it's just kind of a crap pair. CAD crosses. Aussie CAD. Sold off here, did not manage to break my trend line, so I was not triggered. But sadly, I did not short it. But it got up to the trend line and the 200 rejected. Not really interested in it right now. The same as Aussie dollar, actually. This level, if it gets back above there, maybe it pushes higher, but up until then, not really touching it. Kiwi CAD, I think, has been crap. Kiwi CAD has officially been crap since, I mean, realistically, it's right here, September, early September. So I don't really see that changing anytime soon. It looks like it's still going to be range bound. I don't have a ton of interest in trying to do anything with Kiwi CAD. Love Aussie CAD to trade. I love trading Aussie CAD, and I'm not keen on trading Kiwi CAD lately. Silver, Nikkei, oil. I guess I didn't actually do silver. Silver doesn't look great, actually. Silver looks worse than gold. These are the levels to watch on silver. Kind of looks like it wants to break down here. All right, if it gets below here, look for a move to 18. 18, 17, those previous lows. All right, happy to take whatever questions you may have for me. I covered a lot, so favorite. I mean, I think it actually is probably, that's a tough one. From right here, I don't even know. Dollar Swiss, I like Dollar Swiss, but it's tough to buy this one. I like it. To the upside, it's a little bit tricky because it is such a pretty strong downtrend. I think dollar yen might be my favorite, and I don't have a trade on it right now. CAD yen is actually up there as well. So watching the yen pairs in general, and then watching euro dollar for a continuation breakdown are probably my two things to look for this week. But I think dollar yen, Kiwi yen, and CAD yen offer the cleanest technical setups, and pound dollar does as well, although pound dollar's technical setup is a little bit confused. But really, it's actually at a pretty decent resistance area here, so low risk, high reward type thing for pound dollar. Oh, and actually, I forgot. Actually, another nice one that's pretty clean is Kiwi dollar, if we can see a breakout. So right now, not a ton. Couple breakouts I'm looking. CAD yen is a decent short from here, and that's really about it for favorites. We'll see what how position squaring goes here early in the week if we see any. Other questions? You too, Jason. I'm sure I'll talk to you soon. So when I say a clean setup, this is what I mean by a clean setup. Um, it's a good example. Dollar yen is actually okay. So dollar yen's a clean setup. By that I mean we have a very well established trend line. You can see 1, 2, 3, 4, 5 touches, all pretty much perfect touches on that trend line. So if I see a breakdown, I think it's it's more technically valid. So when it's by clean, I mean straightforward and easy to interpret. Right now, pound dollar isn't a clean setup, all right, because we have a bearish setup and a bullish setup. So we have this bullish bounce off of 162.60, and we have this bearish retest of 163. So it's not really clean. There's a bunch of different ways to interpret it. Whereas dollar yen, a break below that trend line is clean because there's really only one way to interpret that. It's a good question. So the S&B is right protecting 120 on Euro Swiss. This is Euro Swiss. Um, the only trade on Euro Swiss for what it's that I can see is if we manage to break above this trend line. To get Euro Swiss down to 120, I think we would need to see dollar Swiss below. Hold on, let me jump out to the weekly chart and see where we display. So this is where dollar Swiss was the last time Euro Swiss is below 120. This is the intervention candle, okay, which was a fairly spectacular candle. So we would need to see dollar Swiss down at least sub 80. I mean, if not sub 75. So quite a ways to get down there. And then euro dollar would have to cooperate. So down here, basically, by getting down again into the 120s. So I think that we would need to see some really big divergence between dollar pairs in terms of dollar Swiss and euro dollar to get back down to test that euro Swiss level. So I think we would need to see euro dollar stagnate around here and then dollar Swiss get down to about 70. Not 70, 75, and we could see euro Swiss sitting at 120. I don't see it happening. Yep. Other questions, requests, concerns, etc. All right, then. Thank you guys very much for joining me. I always appreciate you guys spending some of your Sunday / maybe early Monday with me. I will be posting the recording of this as soon as it's done, so you can find it on our Facebook page, on our Twitter feed, on my Twitter feed, etc. How do I interpret euro dollar? Tentatively bearish euro dollar, but I think it's all going to depend on how the market chooses to react to the FOMC. We made a lower low. We're hovering right below this 618% fib. It's holding up decently off of this 50-period EMA here on the 4-hour chart, but I think that it's trying to roll over. If it gets an excuse, either softer PMI numbers out of the Eurozone on Monday, Draghi has a speech if he comes out dovish, or if we see the FOMC boost the dollar. I think we could see the dollar much lower by the end of this week. We could see euro dollar much lower by the end of this week. But the major support level is still around 136.50 or so. Yep, no problem. All right, guys, thank you very much for joining me. I'm going to head out, get some dinner, and see what markets are going to do this week. As always, you can find me on Twitter, and you can find Global FX Club on Twitter. So make sure you check that out. Thanks for joining us. Have a great week, and I look forward to talking to you guys soon.